I only use one entry model when entering trades, and I'm going to show you exactly what that is and how that helped me make $2,500 today on my FTMO account. And before the day is done, which is 11 PM right now, you should be able to replicate it. So stick with me. Let's jump onto the charts. All right, cool. So the premise of this strategy is, first of all, we are looking at the higher time frame key levels. Okay, so what have we hit on Euro USD? Currently, we have just taken out the 2023 lows right here. We've taken out the current yearly lows, and we are now tapping in to this key imbalance area. So I've marked this out here, as you can see, and you can tell, look, we can definitely expect some sort of reaction around here for buys to the upside. As you can see, on the monthly, we have just shot down. This has been such a bearish month. Literally, the last 2 months have been super bearish. So we're coming into the end of the year now. We've taken out significant liquidity, and we are in a higher time frame key level. All right, that is one of the most important things to understand at the moment, right? When we drop down to the weekly, we can then see that even though we tapped into this higher time frame key level, we haven't shown mass bullishness yet. So we're still a little bit skeptical. We don't really know if price is looking to reverse from here or if it's looking to go lower, okay? So on the weekly and the monthly, okay, we can expect to buy here. The weekly, we're not 100% sure yet. But first things first, what do? We mark out, as you know, the previous weekly high and the previous weekly low, okay? That's an important thing because we want to be buying in a discount or selling at a premium. But in this case, we are buying at a discount, okay? So let's go on to the daily now. Now, today is the 26th of the 11th. It is a Tuesday. And for me, I always like to play the Monday range. The Monday range strategy for me is probably one of the best models that I've come across. Shouts to the author, the Renaissance group, who helped me with that. But this is honestly one of the best models that I've seen. And I highly suggest, if you are new to CRT or you're new to kind of like ICT in general, I definitely would suggest looking at the Monday range. So what does that mean? We've got our key level here, right, which is over here, which is the previous, double check, yeah, that's the previous yearly low, which is significant liquidity, and look how much we've dropped, right? So once we hit that, we are not buying here, right? We're not just buying here. We're not buying blindly. We're looking at price and going, all right, cool. We could consolidate here, but I'll tell you what, we're definitely not selling. We're definitely not selling because look at this impulsive move. We can expect a reaction. Key word here though is that we can expect a reaction, not a reversal. Yeah, I just want to be clear with that because some people just think that just because we tap into here and we've taken liquidity, it now means now we're coming all the way up to here. That's just not the case. I'm looking for a reaction and I'm looking for it to happen in my parameters. Okay, so first things first. All right. We are, let me just wind this back a little bit quickly. So I'm going to wind it back to here. Okay, so first things first, we've marked out the previous weekly high and low, right? And we can see currently right now we're in a discount. Now, we have a volume imbalance here, right? Usually, we don't get these that often, but that's obviously because we've tapped into a key level. But we are looking for, let's say this was just a big candle, right? Which we would assume it was. This is an imbalance, all right? And if you're part of the 9559 FX community, you will know that we go from internal liquidity to external liquidity, right? Always internal to external. That's just the way it goes, okay? So we mark out our 4-hour candles, which we have sorry, let me go on to the UK time frame because I am London. Well, I'm in Thailand right now, but I trade the London time frame. So we mark out the 10 p.m., all right, the 2 a.m., the 6 a.m., and the 10 a.m., okay? And what we're looking for essentially is usually for CRT, well, for my entry model anyway, we are looking for 4-hour lows to get taken. But there is a key rule that I've been teaching you guys for a little while now, and that is if either of these these two 4-hour candles sweep significant internal liquidity, all right, just gonna say it again. If any of these 4 candles, the 10 p.m. or the 2 a.m. candle sweeps significant internal liquidity into a key area, we can then look for a buy without these 4-hour candles needing to be swept. So what have we got here? On the 4-hour, we swept this internal liquidity into an imbalance and closed above. All right. So just to be clear, the first thing that we've got is we are in a higher time frame key level. And it's fucking the key level. It's the biggest key level in 2 years, all right? We then have an imbalance and internal liquidity swept, okay? So an imbalance mitigated, and internal liquidity swept. All right. So now we're looking at things and we're going, do you know what? What else could add to my buy bias? All right. We then have, what is the internal liquidity? What's the internal liquidity? Right. We've taken out the Monday low. Right. This is the previous daily low. And if we're playing the Monday range strategy, which in this case we are looking at price going, cool, Monday low has been swept. And what do we know about the days of the week? Monday tends to consolidate, Tuesday tends to manipulate, Wednesday and Thursday tend to expand, and Friday tails off. All right, it's the power of 3, okay? So if we're looking at a weekly candle and we're bullish, we look for open, all right, which is consolidation Monday, low, which is Tuesday, taking out some liquidity. Tuesday can expand, or Wednesday and Thursday can expand, and then we tail off. And that is like a candle like this, okay? So if we can identify this manipulation, all right, we can then see a break of structure and catch that and continue. All right, so I hope obviously make some notes on that. I'm trying to speed through it just to kind of get to the nitty gritty, but I hope this really helps. But this is how we're building a picture, right? It's kind of like if you're playing charades, yeah? You don't want to just like look at one thing. Let's say, for example, someone says, oh, it's a film. You wouldn't just suddenly go, oh, Monsters Inc. Don't know why I thought Monsters Inc., but Monsters Inc. You wouldn't say that. You'd be like, is it a cartoon? Or is it a real life movie? Is it a movie based on back in the day? Is Leonardo DiCaprio in it? I don't know. Like, but you want to build that picture of like, okay, I'm starting to understand that I have an idea of what I think this person would pick as a film, but I need a few more clues. So we've got 3 clues right now that are adding to our confluence, right? Adding to our confluences, right? So now that we've got the higher time frame confluence, we've swept the internal liquidity into a key level. Higher time frame has already met a key level. We've closed back above on the 4 hour here. I am now dropping to the lower time frame and trying to see what is interesting and where could I get in. So this is all documented on the live stream. I might even upload the live stream. I don't know if I can do it for YouTube because I think that I was playing a lot of dumb music in the background. It's my music, but it just gets taken down for some reason. Like, bro, it's literally, I'm playing my own music in it, but for some reason, yeah. Anyway, copyright does that. So quickly moving on. So we continue higher, all right? And I'm just gonna take this out for now, but what we do is these lines are the 4 hour candles, yeah? 10 p.m., 2 a.m., 6 a.m., and 10 a.m. My playing field is here, the 6 to 10 a.m. Why? Because I'm looking for an open, low, close high if I'm bullish. Now, where is the liquidity? Monday high. All right, this is also internal liquidity, and this is actually where we took profit. So I'll be straight up with you. This is where we took profit, but I was looking at the high here. I should have left some partials, but I just wanted to take some money off the table for today. 2.5R and 3R is like my sweet spot. So if I have some sort of anxiety, or I think, you know what, for me personally, I think that we could go into a consolidation throughout December, just because the banks are kind of away, people are trading less, and we've hit a key level which we could consolidate. I'd rather be safe than sorry. I'm not trying to hit home runs. And if I'm honest with you, I'm not that great in hitting like 10Rs, 7Rs. I might hit the odd one once every few months. But for me, 3R, for example, is my sweet spot. You get me? So, what are we looking for right now, right? As if anyone was on the live stream on Twitter, you would remember that when we opened, okay, we were looking at an open, low, and we were initially looking at, could price come down to this 50%? Right, this 50%. We've already come down here, swept some liquidity, internal liquidity, and impulsed higher. But I'm now looking at the hourly going, we have a nice little imbalance here that it looks like price is just going trickle, trickle, trickle down. All right, so what do we look for in expansions? We look for expansion, consolidation down, expansion, consolidation down, and repeat. So when we have an imbalance like this, I'm very interested in this POI, okay? So that's the next clue. But now we're going on the entry model. So what do I look for? I look for consolidation, manipulation, a IFVG to get disrespected, and then I enter. But there's one key thing here, a really, really important aspect of trading that can separate some traders from being unprofitable to profitable. Okay, and that is time and timing. So first things first is that we can see at 7 a.m. we made this, we took liquidity and then we closed above, all right? Which you can see, I believe it was this candle. Okay, we closed above. So the old me, okay, from about 6 months ago would enter here. And if you're in the 9559 group on Discord, the link's in the bio, I've done multiple case studies on this that have literally happened this month where we have seen an entry happen, but it's not in the correct time. So half of the 4-hour candle is the prime time for trades, 8 o'clock, all right? So we're looking at this right now going, I think we're generating a bit more liquidity, even though the entry model is there, even though it's there, it's not quite clean enough for me. It's not quite clean enough. So we wait, right? We wait and we see, oh, we even get a big wick up. Have we broken structure? No, because we didn't close above it. We didn't close above it, all right? Also, it's not our right time. If you have a spot price consolidating around 7:30 to 8 o'clock UK time, anticipate that we're probably gonna push a bit lower and then push higher, okay? So let's continue price and see what happens here. So I wanna see some more internal liquidity being swept, and then I wanna see an IFVG being disrespected. So we're in this imbalance now, right? This 1 hour imbalance. I'm just gonna remove this because you know what the crack is here, all right? We have now taken the liquidity. We have taken the liquidity here and closed back above. Is that enough for our trade? No. Because why? Our entry model is not that. Our entry model is specific, okay? We are looking for a bearish imbalance, or FVG, whatever you want to call it, to be disrespected and become an IFVG, which is an inverted fair value gap. Why is that the case? All right, because we want to see the liquidity swept and the momentum change. All right, it takes a lot for a candle to take liquidity and then go in the other direction. All right, it takes a lot. It means that that's probably a reversal. All right, shout outs to Dodgies, by the way. Dodgies is the IFVG king. I don't trade like him, but bro, IFVGs are the Juan. All right, so let's see what we get. Do we get it? Not quite yet. All right, but there's a key thing here that I haven't discussed with you yet. Haven't discussed this with you yet, right? We head over to GU. Now, look what's happened with GU. We're looking at EU and GU thinking, which pair do I want to trade right now? But look, this is SMT. We want to find the more bullish pair to trade. And right now, we just made a lower low on GU, but on EU, we failed to make a lower low. So let's see what happens now. We close above. Not only do we close above, but we fail to make a lower low. So we've now made a higher low, which means this is the more bullish pair. So now we've closed above. I want to see what price does. Boom. We have now broken structure, closed above this swing high point. We've taken liquidity. We've closed above this FVG, which has now created an IFVG. And now we can set our entry. But what do we need to do now? We've seen, right? Okay, let's go quickly recap, right? And go back to what we've come up with at this moment in time to put together this trade before I just show you the entry. High time frame key level, hit. Imbalance mitigated and internal liquidity swept, hit. Monday low has also been swept, which is this, hit. Then, in terms of the entry model, we look for, all right, because we know that if the 4-hour candles here have taken significant liquidity, we are now just looking for internal liquidity to continue the momentum. So what are we looking for? Internal liquidity to be swept. Check. We are also looking for timing. So time, 8 a.m. manipulation. Yes, and it happened perfectly. Then what do we get? We get a wick taking internal and an IFVG. Check. Not only that, but we get an expansion breaking structure. Now, sometimes you can enter aggressively once it closes above the IFVG, but if you can get a little expansion as well, breaking structure, that is the gold mine. So right now we have got that, which is why I class this as an AAA setup. So what do? The only thing that's left, we also have SMT, so we know this is the more bullish pair. So what do? We set our limit now, kick back, enter, and I took here, this was for, I took half percentage here, I took half of my position off here and half there. And I think actually, if I'm completely honest, I'll go back to the screenshot. I think I took half here a bit more here and a bit more here. So I took partials, but it worked out to 2.5K. And that's about it. But as I said, I could have held it and waited for the Monday high to be taken, and that would have been a much cleaner trade, if I'm honest with you. I should have probably held it, and that's something that I need to get better at. I need to get better at holding high conviction A+ setups, but that would have been 7K, but I came out with 2.5. But I'm not going to cry about it. I'd rather take my profits. But that is that. If you want to follow my journey, follow me on all of the platforms, and make sure you like and subscribe on the video, please. It helps me out a lot. And if you want to see more trade breakdowns like this, then please drop a subscribe. But yeah, anyway, it's your boy ARTAN. Love.